Welcome to this Killick Explains video. This week I want to take on investing acronyms. These are the short versions of collections of countries or stocks that are popular ways essentially of marketing ideas to investors. I want to talk about what they are, give you some recent examples and explain why I'm not a huge fan. So here we go. So over the last 2 decades, we've had loads of investing acronyms. Anyone wondering what I'm talking about? Well, let's think back to maybe 15 years ago. A big one was the BRICs. That was Brazil, Russia, India and China. Why did people group them like that? Because they thought it was a neat way to talk about a collection of interesting emerging market countries that you might want to plough money into. More recently, the tech boom brought us the FAANGs, either spelt with one A, depending on how many of them you think there are, or spelt with 2 A's. That's the Facebooks, the Apples, the Amazons, the Netflix and the Googles. Made sense to bundle them together, some people thought, because they were all doing well, large, taking over the world during a pandemic and so on. Then you've got the Chinese stocks, the Baidus, the Alibabas and the Tencents, the BATs as they're known. Then you've got the MISTs, you probably get the idea, Mexico, Indonesia, South Korea and Turkey. And what's going on here? Essentially, people are just using shorthand acronyms to bundle a load of ideas together in the interests of not having to spell it all out, and also, if you're being slightly cynical, being able to market an investment concept to willing investors. So what are the advantages? I mean, it's all very well for me to slag these off, but they are used a lot. You see them quoted in the press all the time, or you did until recently. They do raise awareness of stocks and sectors. You know, it's no bad thing that people start to think about, well, actually, which group of stocks am I the most interested in? They stimulate debate, because people have the debate about, is it the FAANGs with 1A or 2A? You know, which groups of countries can we put together? Which ones should be in the club? Which ones should be out of the club? And I like that. Debate is good. Rather people talked about stock markets than remain silent and uncomfortable and not confident. And it kind of works until it doesn't. Now, what I mean by that is, for a while, there's probably a reason why some investment bank or institutions come up with BRICs, because for a while you'll make some money by riding that wave. FAANGs were the same, emerging market countries are the same. But, and here come the downsides, this is essentially quite lazy investing and it's dangerous in the wrong hands. You cannot simply rely on a group of marketing acronyms as the basis of your entire long-term investing strategy. If it was that easy, we'd all be doing it and I'd be filming this in Barbados. Okay? So things change and that's worth bearing in mind. The BRICs, for example, I love it. Someone called BRIC, the bloody ridiculous investment concept, excuse my French. In other words, it can't be that simple. You can't just take 4 countries, group them together and go, there's my path to riches, if you like. There's over-concentration risk, because in fact, if you only invest in certain stocks, in certain countries, in certain themes, you are probably going to come a cropper at some point, because markets move in cycles. Things wander in and out of fashion. So over the long term, you need a nicely diversified portfolio. And as Warren Buffett put it, investing should be simple, but it isn't that easy. In other words, if we could all just go out and buy a group of simple acronym-based stocks, well, then investing wouldn't need all the expertise that goes into it from people like Warren Buffett and so on. And it does ignore, as I say, market cycles and valuations. It ignores the fact that, as we well know right now, as this video is going out in the middle of 2022, different groups of stocks come in and out of fashion. The world doesn't stand still. A concept that was relevant 15 years ago, 10 years ago, even 2 years ago, may not be relevant now. So what is the right approach? Because I'm being a bit negative here. I'm sort of dismantling the idea of these acronyms. So what is the right approach? Number 1, avoid gimmicks. Okay? Make sure you diversify across themes, sectors and geographies. By all means, improve your understanding of a theme like technology or emerging markets, for example, by starting with the acronyms. I mean, that gives you somewhere to start your search for decent stocks and ideas. But make sure that you are properly diversified. Diversification, by the way, won't entirely save you if the whole stock market drops, but it will minimise the damage compared to, as we've seen recently, piling tiger-like into just a handful of previously successful growing stocks. Choose stocks on merit, okay? In other words, don't be lulled into not doing your homework, doing your ratio analysis, doing all the sort of stuff that I've talked about in other videos that are required to properly analyse a stock, properly analyse momentum, properly analyse sentiment, and don't sacrifice value to pure momentum on that very point. In other words, you have these things called value stocks, momentum stocks. A decent portfolio, if you're looking at, say, growth, will try and blend them together. You don't want to be in one bucket at the entire expense of another. And finally, remember, investing isn't gambling. All right, tempting though it might be to watch a group of stocks start rising quickly, watch an acronym get pinned onto them, and then think, oh, crikey, brilliant, I'll just pile in to that concept. It isn't that easy, and investing isn't gambling. You need to be looking to take a long-term view. Okay, a lot of the stocks that are suffering at the moment will come back if they are good, solid, strong brands and ideas. Others will fall by the wayside. But anyone who's done their homework won't be too worried about whether or not the FAANGs are rising or falling, whether or not the BRICs are rising or falling, because they'll have a nice diversified portfolio which can deliver over the long term using a selection of all the key investing principles I've outlined in other videos. Now, I'll stop there. If you'd like to know where those other videos are, then killick.com/learn is a good place to start. You've got an investing principles tab here. You've got a shares tab here as well. For those people who are relatively new, there's a guide. It's not on here actually, but it's about the same shape as these two. It's a blue one called How to Invest in Equities. So editor@killick.com for that one. And if you'd like to see some of this stuff in context, rather than just talked about by me or written about by me, if you like, then this thing, Confidant Quarterly Magazine, editor@killick.com, wouldn't be a bad place to get started there.